I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. Today is Wednesday, July 22nd, and we're just going to briefly run across three separate markets and some of the charts that we're looking at for the back half of the week. The three markets that we're going to touch on are lean hogs, soybeans, and corn. We've got the lean hogs pulled up right in front of us now. As you can see, it has been a clear downtrend for the better part of the first half of the year. Lower highs and lower lows consistently. So the bears are still in full control, but we are coming up to a bit of an inflection point here, trying to carve out a near-term low for this hog contract. As you can see, over the last couple of weeks, we've started to mark higher lows and higher highs, but we're right up against trendline resistance and previous support. Previous support now becomes a resistance. If we can get consecutive closes out above this 53.5 to 54 area, I think that opens the door for an extension of this rally and invites momentum traders to step in, taking us back to this old resistance level back in May. That comes in closer to 58. So we always say the only thing you get from picking bottoms is stinky fingers, but if you're in the mood to look for some value, I think there's an opportunity here in lean hogs. The tap out point where you want to take your medicine, if we break and close below this psychologically and technically significant $50 level, that's where you take your medicine, move on, look for the next trade setup. Moving on to the soybean market. Soybeans we've been pretty upbeat on for quite some time now. We did run up to technical resistance here a couple weeks ago. We defined that as about 910 to 912. It's the 200-day moving average as well as the 50% retracement, or basically the middle of the range from these highs to these lows. So a lot of interaction between buyers and sellers at that point kept the lid on things. I think we can make one more push up there, but without any significant weather concerns, I think it might be hard to get a breakout above that pocket. I guess the one thing that could propel us higher is export business. If we continue to see export business ramp up, that would be the catalyst that the bulls need to see to get a technical breakout above this psychologically and technically significant resistance pocket closer to 910. Now, wrapping things up with the wheat market, the corn market rather, it's a stick in the mud. There's just really not a whole lot to write home about. We held support 330. Big whoop, not a whole lot to get excited about. Just a little bit of a relief rally. The level that we're looking at here this week is, this gap right here. That's what the bulls want to see, consecutive closes out above this. This was previous resistance as well. Consecutive closes out above this 346 area, potentially encourages some additional short covering, but looking for much more than that with the way fundamentals are right now. I just don't, it's a little bit of a lotto ticket, so I wouldn't hold your breath. Not to say that it can't happen, but I wouldn't hold your breath. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.